Welcome back to Income Trading 101. Today is April the 8th. It's the evening of. I'm creating a video for Friday, April the 9th. So I'm going to go ahead and make sure I got this taken care of. But looking at Twitter stock, symbol TWTR, Tango Whiskey Tango Romeo. This stock is one of the main social media companies. So I wanted to take a look. So it's had quite a wild ride since 2013, I believe, when it first was IPO'd. But that being said, still going to do the normal analysis. I can see right off the bat that current price is sitting right at a really interesting level. Look at that high that we saw back in 2014, or late 2013. Hey, we're going to use our usual indicators, but if you haven't already subscribed to this channel, please go ahead and hit the subscribe button so that you can be alerted of all the new videos I create every day. So let's go ahead and get started without further ado and take this. I really want to analyze the last year. What's interesting is, you look at Twitter, the February 2020 high sitting just shy of $40, and it dropped all the way to, sitting just around $40. It got cut in half and really has grinded a lot higher over the last year. I'm just going to go ahead and pull, because I'm going to analyze this really starting post-pandemic, the 1 year mark. Really 1 year would be right around here, April the 9th. There you go, April the 8th. But I want to catch this entire upward move when I do a little retracement analysis as well. Let's look at the moving averages. So we'll start off with our normal moving averages. I'm going to get 3 of them. I want to have the 10-day, the 20-day, and a 60-day. I use the 10 as my buy signal. It's my short-term average. I use the 20 as a medium term rather. And if the 10 is higher than the 20, I know there's a good likelihood of there being an upward trend. And I use the 60 as well as a longer term. So when we have a true up move, you see how the green line is higher than the red, it's higher than the yellow. It means the 10 is higher than the 20, is higher than the 30. And I really want all three indicators, all three averages rather, to be in line if I'm going to make a move on a stock. I want to see it at some time frame. So we see at the daily time frame, we are officially in a period of congestion, because the 10-day is between the 20 and the 60. I'm willing to bet, though, when we drop this down to the 1 hour, that we'll see a much more bullish scenario. And we do, because of this last upward trend that started back in late March 26th, a couple weeks ago. So you got the 10 period higher than the 20, higher than the 60 period. That is a bullish indicator at the 1 hour. Let's take a look at the 30-minute. Still bullish at the 30-minute level. All three moving averages are in order, heading higher. And of course at the 15, you also have a bullish indicator. So everything underneath, for the most part, everything underneath the daily, or I guess the 1 hour, was a little bit congested. No, 1 hour was fully bullish. It was the daily that was a little bit of congestion, but I'm sure that will self-correct as this as Twitter stock looks like it may be headed higher. Let's take a look now at the MACD indicator. The MACD is a great way to get a sense of momentum. And if you ever want to, I typed in momentum. If you want a good explanation of moving averages, MACD, and even some of the retracement analysis that I do, definitely look at the video I created called How to Trade Stock Using Technical Analysis. It doesn't just work for stock, it works for crypto and Forex and every other asset that we can look at using price movement. So at the daily, you can see that when you have an ongoing trend, upward trend or downward trend for that matter, this indicator is less valuable. But when you start to get swings, it really can be valuable. So you have this crossover of the blue, which is the MACD line. It went below the signal line, which is red. And I like when it crosses below the 0 line, but it already has crossed, meaning this momentum is still going higher. So it's just really a lot of congestion at the daily level. Let's look at the hourly. The hourly had a very nice crossover here and went above the 0 line to go ahead. It had a little bit of a challenge, but look at there. That's still on the hourly is matching the moving averages in suggesting that this is a bullish signal. Let's look at the 30-minute as well. The 30-minute had a strong cross in negative territory back here in on the 25th of March, and we saw it cross into into positive territory here too on this gap move. So had you bought there and kind of held it through, although you might have gotten shaken out here when this crossed below, if you had done that, you might have lost a little money. But if you had bought this cross that went positive, you'd be back in the positive there. But this can be a hard indicator to really trade fully using, but I like to use it as verification for other to validate other indicators. So like here you have this crossover of the MACD and the signal line in negative territory, meaning it's below this 0 line, and then it crossed the 0 line here. So had you bought somewhere in that time frame, you would have been in line to catch not only this pop, but all the upward movement that's happened since then. So let's take a look at, I like using Fibonacci retracement and just getting an initial look at where support and resistance may actually be. So I'm going to go from the bottom that we experienced post-pandemic during the pandemic back in March of 2020, and I'm going to pull this all the way to the top that we saw in late February of 2021, and just stop it right there. I'm actually going to tighten this up just a little bit so that we can see all of the different support levels. And what's really interesting is that, these, even though we've come close to the 38.2% retracement, we really didn't reach that. And the Fibonacci itself is not giving a lot of what I would call strong support and resistance levels. However, I know for a fact that there are some really strong support and resistance because of the history here. So let's go ahead and just draw a nice line right across, because this is actually really, really quite important. And that is going to be right around there. Try and do that and tighten this up and pull this on out. And you're going to see that current price is actually right around one of the previous highs for this stock. That is huge, 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 huge. I can see some other longer term support and resistance in this too. Let's pull this on. Oh, didn't mean to do that. Need to pull it on over. I like to see levels, or look for levels that were important previously, and see, because they may actually be important today. There we go. So look at there. In this scenario, you have the very level that played as resistance back in, what would that be? October of 2014, played as resistance in December of 20. That's really important, because oftentimes we see that become support. So ultimately, if we break the current level, I would fully expect a retracement all the way up to 80. I think it'll try to challenge this previous. Sorry, I'm moving the chart around. I think it'll challenge the previous high. So another, roughly $9 or $10. But if this current level remains as resistance, I think next up we could easily see it fall all the way down to this, 50, 56, $57 range in this stock. So that would be another $13, lower, $14. So it's important. I'm sorry, more than that. What am I doing? Closer to, $15, $16 lower. So you definitely want to have an idea of these ranges. Yes, I feel like everything is bullish right now, but we are right up against this resistance line. And so for me personally, I mean, you can do one of two things. You can decide to trade this, expecting Twitter to go through that resistance level, at which point you should expect it to become support. So look at what happened in this region. Even though it dipped below it, it still ended up popping above it days later. And this previous level became support when it used to be resistance. But then it acted as resistance after it fell through. And right now, we're right there. It could become support or resistance. I would actually wait. Me personally, I like to wait a day or so and see, is this going to strongly cross this previous resistance level and let that level become support? Or is it going to fall all the way down and this level will have acted as resistance? So more to come with some new data tomorrow and Monday. But that's it. Thank you guys so much for watching these videos, because I really enjoy creating them, not watching them. Also, I normally would have created, I'll create one just so you guys, those of you who watch some of these videos, I don't want to let you down, but you can just about create, you create your nice channel there. And then we went below it, ultimately blew through it, came back down. I mean, this period back here in December, that would have been a tough time to trade this stock. But man, it just took off and shot all the way to the moon up until, late February, when it's come off. And now it really is just a question of whether or not we're going to see this current level become support, meaning price passes through it, or if it's going to become resistance. So thank you for watching these videos. Good luck in your trading. As always, happy trading. Take care.